We start tonight with the first of several deeper dives we plan in coming days into the particulars of the Republican tax plans as the House and Senate get to work reconciling the differences between the two. A number of provisions found their way into the bills along the way, some related to taxes, some not. Tonight, we'll focus on a handful of them, paying particular attention to how each might affect middle and lower income taxpayers. For that, I am joined by our own Lisa Desjardins, who's been following the process closely on Capitol Hill. Veronique de Rugy, she is a senior research fellow at the Mercatus Center, a free market research institute at George Mason University. And political analyst and historian Thomas Frank. His 2004 book, What's the Matter with Kansas?, explored the rise of populist conservatism in the U.S. Lisa, you had a long weekend. How you doing?
I'm doing all right.
Up late while this was all unfolding. There's lots to talk about as far as differences between the two bills. Let's get kind of top line. What are some of the key differences that this so-called conference committee, the two sides of Capitol Hill, as they get together to try and figure out what the bill will be that will go to the White House?
That's right. That's what they're doing right now. The House and Senate each will appoint select members to join this conference committee. They will be part of duking out what ends up being, they hope, the final bill. So let's talk about the most important, big, sweeping parts of this. How about you and I, individuals? What's happening here? Well, in these bills, both plans would cut tax rates, but also limit deductions. So while most people would see a tax rate go down, the effect on you really depends on how many deductions, if any, you take. That's why we see some people with a big cut. Some people maybe might see their taxes go up. The big difference also, too, Miles, to remember there is that for the Senate, those individual tax cuts are temporary. The Senate says they're counting on those being extended later, but, it really isn't quite clear. So let's also talk about the other big, gorilla in the room here, the corporate tax cut. That is what the Republicans are the most excited about. So for businesses, what these two plans do, one, they both cut the corporate tax rate to 20% from the current 35%. And then also the Senate, one difference here is that the Senate would have a larger tax cut for so-called pass-through businesses. Those are businesses that sometimes are owner-operated, usually small S-corps and different kinds of businesses that might be owner-operated like an accountant, or could be Donald Trump himself. He's got to pass through.
If we were just talking about what you just mentioned there, without getting into the real details of the plan, do you think the two bodies could come together? Are they close enough?
Yes, they're very close, and they both have incredibly high motivation levels to pass these tax cuts.
All right, so the devil is always in the details. Let's go into them. First of all, we know that the Affordable Care Act came front and center, and the mandate for coverage. Tell us what each side has determined on that.
This is actually one of the trickier issues. The Senate has repealed the individual mandate requiring all Americans to get health insurance. There would be no penalty if the Senate version of this tax cut bill went through. The House bill, however, did not touch health care at all in this particular way. And that's a big difference, not just in philosophy, but also in dollars. By doing that, the Senate raised over $300 billion that they put into tax cuts. But, Miles, the issue in the House side is they have a lot of moderate members who are worried about people losing health insurance or not signing up for health insurance if the mandate is not in place.
All right, Tom, the individual mandate, which is part of Obamacare, the Affordable Care Act, that is something that gets right into middle-class country. Based, there's obviously still a conference report that needs to come out here. What is this going to mean for the middle class, you think?
Well, I want to take a step back first because, of course, Donald Trump, as we all know, was elected by a sort of a remarkable series of events, blue-collar voters who left the Democratic Party and went and voted for him. It's very similar to the phenomenon that I documented in Kansas many years ago, populist conservatism. And Trump did it by talking to these people about what had happened to their communities, deindustrialization, the bad trade deals, a sort of real raw deal that working class people have got in this country for a long time. Now, ironically, it looks like the one big thing Donald Trump is going to get done his first year in office is deliver a huge corporate tax cut. And there's an enormous irony in this, but this is how it plays out again and again and again with these guys, is that they act populist to get elected, and then once they're in office, of course, they turn around and do these stupendous favors for their friends in the C-suites. As for the individual mandate, this is going to ultimately make healthcare more expensive in this country. I don't think it will. Repealing the individual mandate, which is, by the way, is the most unpopular part of Obamacare, but the rest of Obamacare, the Affordable Care Act, really depends on it. You take that away, it's going to be, I don't think it'll kill Obamacare, but it's not going to be healthy.
Veronique, what do you think about removing the mandate? Is that something that's absolutely essential to make this whole tax plan work?
The short-term impact on getting rid of the Obamacare mandate is one that's definitely beneficial for lower-income people. Something that people don't quite think about is that 80% of the people who are paying the mandate are American families making under $50,000. Right? So these are people who, for whatever reasons, maybe because healthcare is still too expensive, those premiums are higher, they can't afford them, or whatever, they decide not to buy insurance, they have to pay a premium, they have to pay an extra tax. So these, in the short term, talking just specifically about this bill, these are the guys who are going to be benefiting from repealing the mandate.
Let's go to Lisa for a second. Lisa, walk us through what both House and Senate have done here to focus, of all things, on students, graduate students in particular.
Colleges and universities. There's two things. There's a lot of details here, but the two biggest ones, first of all, that student interest loan deduction that almost elected Bernie Sanders president because he wanted to change all of that. Well, the House would actually remove that deduction, so those who have student loans could no longer deduct the interest. The Senate keeps that provision. Now, in also kind of similar philosophy, the graduate student measure that you're talking about, graduate students right now get free tuition, even though they're technically employees, they teach their own classes. The House would tax the value of that tuition. So that say you're a graduate student at MIT, tuition there $49,000, that would be taxed as income under the House plan. The Senate would not tax that. That's a very big hit to those graduate students' bottom line.
It seems, why are they going after the poor grad students?
Well, you've got the key word there, poor. These are people who are politically weak, who are powerless, who are identified as with the Democratic Party. You look at universities and who they donate to, the sort of top donors of Barack Obama and Hillary Clinton. It's going to be all of your, research universities. And so this is a political target, and it's people that can't really defend themselves. I was a graduate student once, by the way. And in case your viewers don't understand this, this is strictly a paper transaction that we're talking about. It's not like the university gives you the money and then you give it back to them. No, you never actually see the money. And so it's going to force the universities to do some accounting workaround or something like that. But no, it's it's just a way of, it's just making a vulgar gesture at the other guy's, core constituency.
Veronique, vulgar gesture, would you agree?
I don't know. I won't question their motives because I just don't know what their motives are. But one of the things that I find questionable is that they have left, and there's no doubt economically that this is income. This is income. And by the way, under the tax plans, these guys would benefit for doubling of the standard deduction, lower marginal rates, and so on and so forth, right? So it may not actually end up being as bad as they think. But what I find questionable is that they have left otherwise a lot of money on the table of tax preferences that they could have gone after that clearly benefit higher income individuals. For instance, they struck this deal about the state and local tax deduction and the exemption, the $10,000 exemption, right? This benefits people who itemize, who are a vast majority are in the top income brackets. Same thing with the mortgage interest deduction. There's just a lot of tax preferences that they have left on the table that would have actually gone towards more simplification, and that it would have been, maybe better to focus on this.
All right, we're going to have to leave it there. Veronique DeRougy, Tom Frank, Lisa Desjardins, thank you all for this wonderful taxing discussion.